We track based on the report, NSA report published that shows the activities in the market in terms of foreign activities and domestic activity in the market. We've seen significant drop in the foreign investors' activity as at June, based on the proportion from about 54% to currently about 34%, which we feel is significant and can be linked to the tight or the restrictions within the forex market. So if Nigeria is eventually removed from the JP Morgan list, it would further reduce the proportion or the activities of foreign players in our market, especially in the stock market. But if you also want to look at in terms of the bonds market, most funds that have been created based on the JP Morgan index. So once you are removed from that index, it means foreign investors need to sell off those bonds out of their portfolio, which will lead to significant decline in the prices of bonds and will lead to increase in yields. Basically, what the NSA does is to create the platform to trade. So I don't see it affecting in terms of the rating of the NSA, because it's the corporate governance that has been built around the listed stocks that will determine the kind of ratings that the NSA gets. But secondly, if we're going to look at its effect in terms of the bond market, then it will reduce the liquidity that we have seen in the market in the past few years, in the past years, which has increased activities and has created confidence, because once there's liquidity, investors' confidence would improve, such that if you need to exit the market at any point in time, you are not. There are no restrictions to your exiting the market to utilize your proceeds. I feel the impact on the economy would be significant. Why? Because the inflow of either foreign direct investment or foreign portfolio investment has also helped cushion the pressure of the decline in oil price, global oil prices, and which has reduced Nigeria's dollar earnings. So if we see, if at the end of the year, if we're delisted from the bond index, it means foreign inflow reversals would increase significantly, which will further compound the pressure on the naira. The CBN in recent time have been coming up with several policies to manage and stabilize the naira, but if this eventually happens, then we may see a significant depreciation depreciation of the naira, which may lead to eventual devaluation of the naira. I think the first thing, when taking it from the CBN needs to first of all exercise a little bit of patience in terms of when I try to look at some of the policies in terms of excluding items from participating from the official window. I feel the physical angle needs to be tidied before you start to restrict restrict manufacturers from participating in the official window. Why do I say this? There needs to be a structure in terms of fiscal policy that will encourage even domestic production. There needs to be like a blueprint on how the government wants to achieve domestic production or local production. So the CBN, on the other hand, should come up with the policy to complement this effort to further help boost local production within the country. So we feel what the Ministry of Finance can do is to, that's based on the guidance we have, that by September, the new, they will have the ministerial list. Then we would expect to see policies around how domestic production would be encouraged in Nigeria, in terms of how do they want to help in tighten the borders, which have been very loose. How do they want to enforce the use of locally made goods? So some of these policies needs to be in place, and if this is done, it will also reduce the pressure even on the CBN based on the demand for the greenback. I feel we have the right tools, even despite the challenges we've seen in terms of decline in crude oil prices. The economy, based on the data from the National Bureau of Statistics, you will discover that even the non-oil sector of the economy has picked up based on policies the previous government have done. In terms of available monetary policies, the CBN is just trying to buy time to see what the physical angle, the policies that the new administration will bring on board, so that the CBN can run with it and help complement on its own and with its own monetary policies. So we feel there are a lot of, in terms of the MPR, we expect that may be trimmed down once we start to see some form of stability, in order to engender growth in the real sectors. Okay. Because by the time lending rate reduces, it will reduce the cost of business. And also in terms of, I would like to just add power, which is very key to doing business in Nigeria. Once the government is able to tackle power, and we have stable power, it will significantly reduce the cost of production. One of the banks that we try to analyze, looking at Wema Bank, spent 604 million naira to purchase diesel for 1 year. When you look at that, that is significant in terms of relative to the profit or the total overhead. Afri-track is basically will help clients recover outstanding dividends and bonuses. Where the parts of some of the value adding functions that have been added will also help explain to clients how they can key into this new development of e-dividend. Basically, what we do is to get the normal form that you need to fill, dividend form that you need to fill. We try to get it from the registrar and give to the client, so the client does not need to go to the registrar to get that, and just explain the processes and what is required by the client to do. Then we can also help submit on behalf of the client. So we've helped, when you look at how the process is gone, then you would have helped the client to reduce the time of visiting, the number of times that the client may need to visit the registrars. So that is how we would also use that new development complement the product, Afri-track product. When you look at the amount of unclaimed dividend, based on available data, about 80 billion dividend still remain unclaimed. So, and a lot of investors, when they look at it, because most of them are retail investors, when they look at their costs of pursuing this dividend, most of them, it discourages them. So for this new development, it will really reduce the outstanding dividend or outstanding claims. In addition, the time investors will receive their warrant would be taken care of once after the AGM meeting and the payment dates. most investors will get the credit for the expected dividend at once, which we feel it will boost investors, especially retail investors' confidence.